Hello and welcome to the Reorg. This is your host, Michael Goldstein, also known as Bitstein. And today I'm joined by Pierre Rochard, a fellow co-founder and board member of the Satoshi Nakamoto Institute. Pierre, how are you?
Very well. How are you, Michael?
I'm doing great. I'm very excited about this. So, Bitcoin is going through very exciting times right now. We are sitting over $100,000. And the whole world is talking about it. Everyone from private individuals to multinational corporations and governments. It is the talk of not just the town, but of the globe. And because of that, we have a lot of new people thinking about Bitcoin in a new way. And it seemed like a good time to revisit the ideas that formed our own way of thinking about Bitcoin and looking back at them and seeing what were we maybe right about? What were some things that maybe we've learned since then? And so it seemed like a good chance to start a show called The Reorg. And, a chain reorganization is when a new block comes in that has more proof of work than a competing chain. And so the chain shifts onto that transaction history. And it happens somewhat frequently, depending on your time frame on the Bitcoin network. But basically, the idea here is that we can go back and see the sort of transaction history of ideas that we put forth years ago and see how well it's lived up with the actual proof of work of living and experiencing Bitcoin. So we started talking about Bitcoin publicly in 2013 through our group, the Mises Circle at the University of Texas, which was a sort of precursor to the Satoshi Nakamoto Institute. We did economics reading, so a lot of Austrian economics, and it was around then that we found out about Bitcoin and started talking about it, reading about what we could find about Bitcoin at the time, which was not much. And we started posting some blog posts on the Mises Circle website, and these later got republished on the Satoshi Nakamoto Institute blog called The Memory Pool, or the Mempool. And a lot of the articles that we are, I guess, most noted for are now, as we're coming up on February 2025, are now over 10 years old. And yet for the past, 10 years, I feel like I've been almost a broken record because we've been kind of saying a lot of the same stuff. But at the same time, the reason for that is because I think the ideas have held up very well. And so I think it's really cool to be able to look back at the ideas and see, what all we may have gotten right. In around 2015, I put together what I called the S&I Mempool Crash Course in Bitcoin Political Economy. And this is where I'm hoping to start the Reorg deep dive into the archives. This is basically an annotated bibliography of a lot of the articles we had written in that sort of 2013 to 2015 era, and structured in a way to try to give our sort of full view of the time as to why we thought Bitcoin would outcompete not just precious metals, but also fiat money and become the dominant global reserve currency. And our very first article, and why I have you on today, is by Pierre Rochard. So it's an article called, let's see if I can get this up on the screen, End the Fed, Hoard Bitcoins, written in on February 19th, 2013. And this was when the Bitcoin price was about $30, which is now, over 400,000% higher. And so this is a great place to start because this was our very first time making a public statement. And Pierre, you were the one who came right out the gate with a very big, bold claim. Do you have any memories of kind of, what inspired writing this?
Yeah, definitely. So I discovered libertarianism back in 2005. So this is before Bitcoin existed. Obviously, Bitcoin coming out in the white paper October 31st, 2008, and then mainnet in January of 2009. 20 years ago, I was a high schooler in France, and libertarianism was very attractive to me. And in particular, what aspect of libertarianism caught my attention was the Austrian School of Economics and their analysis of what we call the business cycle, the up and down macroeconomic fluctuations of the economy. And so I got very interested in money and banking, read lots of both Austrian school economists like Rothbard, Mises, Jesus Huerta de Soto. They stand out as the big three in my mind that have influenced my thinking on monetary economics. I also read neoclassical and classical and Keynesian and neo-Keynesian. In particular, what stands out is Mishkin. He has just a mainstream textbook on monetary economics that I read and also found very interesting in light of my understanding of Austrian economics. And so, of course, this brings me to Ron Paul. I learned about a Congressman, Ron Paul, very early, and I remember being on a rudimentary website that was the exploratory committee for his potential presidential run. This was maybe in like 2006 or something like that, 2007, leading up to the 2008 presidential election. And so, I was donating to Dr. Paul's campaign with $20, money bomb. And I really, I think that the central critique of Austrian economics with regards to central banking is that it is a form of monetary communism, that you're saying that the government should have a monopoly on this particular industry, and that somehow you're going to do well with this kind of central planning. And so Dr. Paul, he had written a book called End the Fed, and I liked it, of course, and this is before I learned about Bitcoin. After I learned about Bitcoin, Bitcoin completely transformed my theory on how action can bring about the end of the Fed. Because essentially before Bitcoin, I was stacking silver around. I was thinking, well, eventually this system will collapse upon itself, and that we'll go back to sound money. But or that somehow magically there would be some kind of political will to reform it, and that was our only hope. Ron Paul's Audit the Fed bill was kind of the only thing we had going for us before Bitcoin. So once I wrapped my head around Bitcoin, thanks to you, Michael, thanks to lots of other people at the University of Texas at Austin, where we were students, that's when I realized that actually we can not just survive the collapse of fiat, kind of with a life raft of gold and silver escaping the Titanic, but rather we can upgrade from fiat. And it's more like, the Titanic is sinking and there's a beautiful cruise ship just waiting there for us to just hop aboard and to go party on. And so that was the impetus for writing this, was to share kind of this new way of thinking about a political action in a more economic and technologically driven manner. I think that initially this was published on the MisesCircle.org, that was the intellectual predecessor to the Nakamoto Institute in many ways, and that we created. So yeah, excited to discuss it today.
Yes, and I have fond memories of putting together the Mises Circle and the website with you. And yeah, there's, I was not as early to libertarianism and Austrian economics, but I think the one of the broader points is that for you and I, we were coming from that world of, reading dusty tomes, large tomes on Austrian theories of money and banking. I was always impressed by your deeper understanding of, say the Chicago school or, other schools of thought. But having that background of the Austrian theory of money and coming at it, but, previously with gold in our minds as the sort of premier monetary good. And then, but both of us also, I think are very internet native. And so discovering Bitcoin was a very natural thing for us. And it was very natural to think of digital money. For me, the scarcity aspect was it took time to wrap my head around. But as soon as that was figured out, all of this, I think, hit us both like a ton of bricks, in the sense that it was so exciting to see just the potential, and it was right there in our face because of the fact that we had this existing understanding of money that Bitcoin could just fit right into. A lot of my ideas felt like it was just taking everything I thought about gold and replacing with Bitcoin. And like you said, offering a much more positive vision of the future, as opposed to, well, I hope everyone just kind of magically decides this is good. So yeah, with that, I thought we'd read through the article and see what you had for us. So, the libertarian strategy for undermining fiat currencies has always centered on making gold and silver viable alternatives. This effort has failed because it is impossible to compete against a digital currency like the dollar with a physical commodity due to the high transaction costs associated with the latter. The only way metals can succeed is if fiat fails. While it may be the case that fiat currencies inevitably collapse over the long run, waiting for this possibility is unacceptable given the amount of damage that central banks are inflicting on humanity's accumulation of capital. The mantra of passing an audit the Fed bill, miring it in scandal, and, quote, legalizing currency competition ignores public choice economics, as well as the fact that digital fiat currencies have already won the competition against metals and would win it again. We don't need another political solution to an economic problem. What we need is a more competitive market currency. Enter Bitcoin. And I think you were saying with this how before Bitcoin there was just sort of this feeling like maybe everything will collapse and, we'll have to go on gold because there will be nothing else. Or somehow there'll be a political will. There will be enough college students standing at a Ron Paul event chanting "End the Fed" that it would actually, somehow cause the whole of the American political system to coalesce around gold or something like that. And very, very unlikely. Whereas Bitcoin offered something new. And I think the coolest thing to me about Bitcoin, and I think this will come up especially in some of the future articles as well, but the fact that when you're engaged in a political route to make change in, in this case, in money, you have to deal with a broad political consensus. You have to deal with, in the United States, hundreds of millions of different acting interests and different groups built from all of those acting interests. And you have to get all of them to agree enough to make something happen. It is an incredibly challenging thing where it is almost an all or nothing proposition in many ways, that you just have to get everyone to say yes, or 51% or whatever it might be to do it. Whereas when you are looking at a monetary upgrade through something like Bitcoin, or really I would abstract this to sort of any technological way of promoting change, you can do it at an individual level. It can be done as marginal individual improvements. And so, people can start hoarding Bitcoins. They can start benefiting from what Bitcoin has to offer them without having to wait for an entire political system to align with them. And I think that is so important here. And, to me, a big takeaway of this article.
Yeah, absolutely. And so, when I refer to public choice economics, it's exactly to your point that the benefits of fiat currency are concentrated within a particular class in society. of essentially commercial banks and politicians. And that the costs are spread out across society on everyone in the form of inflation. And so when you have that kind of dynamic of concentrated benefits and diluted costs, then it's very hard to get everyone to coordinate and to defeat the special interests that are driving it. I think the other part that's important to highlight is with regards to the dollar's success versus gold. And it's not new in the sense that we've seen fiat currencies supplant gold and silver throughout history due to the costs of having to transport gold and silver. And by costs, I really mean, this will be apparent throughout this and other writings, is that there's a concept in economics of total transaction costs. So we're not just looking at like, oh, you have to pay someone to move the gold. We're saying like, add on the risk of a robber attacking you while you're moving the gold through the mountains or whatever it is. And that with paper, paper I think was an important technology. Essentially, you add on wax seals, another important technology, and then you fast forward to the 20th century and you add on a bill counting machine. Bitcoiners are not used to thinking of bill counting machines, but that's a fiat light node, right? It's verifying the authenticity of these bills. And that is a key technology for preventing a counterfeiting and for making sure that you can continue to have a paper currency that is going to be able to compete against gold. And then, of course, with the advent of computers and computer networks, this further compounded the advantages that fiat has over physical gold and silver. And so it really, I think, became an intractable problem once the dollar became a digital currency. And now, of course, we've got stable coins and all this stuff. But fundamentally, the dollar was already digital. The only thing that stablecoins add is really the question of how permissionless is it. It's marginally more permissionless with stablecoins, and
I would also say like more programmability.
Sure.
There's a better API that you can work with as opposed to trying to work with either Fedwire or your local bank.
Yeah, and libertarians they like to think that the dollar is forced onto us and that we have to use it because it's quote unquote legal tender. But I think that the problem with the dollar is a lot more nuanced, which is that they were able to hard fork it repeatedly without us consenting to the hard forks, and so they moved it from silver to gold. And then they changed the gold to dollar ratio several times. And then they removed it entirely, all without any kind of democratic referendum or anything like limiting constraint on that. It was all done through legislation and administrative procedure. So the other key enabling technology for fiat currency is also one that we might be skeptical of as libertarians, is central bank independence, right? So you could imagine a world where the president gets to decide how much currency gets printed and he gets to decide it directly. But they have actually put in place institutional controls around the ability to debase the currency. And by slowing down the debasement and kind of making it more of a rigorous process and decision-making process, they have been able to extend the lifespan of fiat currencies. And, from my perspective, that's worse, right? We want the demise of them to be accelerated. But from their perspective, it's really given their schemes a very long life.
Yeah, they've sort of perfected it. And so it's not to say that, legal tender is not a big problem, but there are additional things, just as there's many types of transaction costs that money deals with. Legal tender is not the only inhibition on transacting with currency that exists.
Well, and on its own, it's useless because, there's plenty of cases of hyperinflation and demonetization of the currency despite legal tender.
Right. And you mentioned the Fed independence. What's also interesting about that, though, is the fact that's almost at odds with the idea of having a democratic referendum. So on the bright side, it means for people who have to be stuck using the dollar, which was all of us up until 2009. You don't necessarily want your money to be at the whims of politics, because everyone will just vote to, print all the money and give it to themselves. So there's that independence that keeps away from that. But that also makes it so that you can't have a democratic referendum. So at the same time, like there is not necessarily a political check on the system per se. So It's kind of it's in a kind of a precarious situation, certainly one that's not conducive to liberty from either direction.
That's right. It's both a ceiling and a floor on the currency.
Yeah. So moving on, getting into transaction costs. Low transaction costs make Bitcoin the most competitive medium of exchange in humanity's history, and it may be the case that a currency with even lower transaction costs is theoretically impossible. To learn more about Bitcoins, I would recommend our excellent Bitcoin Reader. And then there is a nice chart that I think you made yourself. I don't remember the exact provenance of it. But as a quick side note before that, the Bitcoin Reader was put together as a set of Bitcoin resources for the Mises Circle group when we did our first meeting about Bitcoin in January 2013. And it is hilariously sparse. There really was not much at the time besides the Bitcoin Wiki, Bitcoin Talk. I think the subreddit existed, and there was Peter Serta's master's thesis, which was a big inspiration for us, and actually what we discussed specifically at that meeting. And then there were a few news items regarding Bitcoin, but in 2013 it was not easy to find good information, and I'm actually extremely grateful to Peter Serta for having written his thesis, because he did a lot of the hard work of putting Bitcoin through an Austrian lens and giving it so that us college students could have an easier time getting a broad story without having to hope we'll come across a bunch of great resources. He kind of gave us the one that could get us started.
Yeah, that's right. I'm definitely standing on the shoulder of giants here. I didn't come up with any of this information on its own. It's all just synthesizing different sources of information that I learned along the way. And so, I do think that I created this chart from scratch, but on the other hand, it's not from scratch at all. It's just from, stealing other people's ideas, which I think is good. I think people should steal, this chart. People have, so it's good.
So, for those listening, basically it's talking about the transaction costs and comparing precious metals, fiat currencies, and Bitcoin. And it goes over many dimensions. In Menger, in his Origins of Money, he talks about how there's, I forget how many different things he mentions, but they're basically over the dimensions of space and time. Saifedean likes to add the dimension of scale. And each one of those things, there's many uncertainties that you're facing with regards to time and space and scale. And here Pierre had listed out a lot of these. And so, storage, transportation, security, record keeping and counterfeiting, and the issuance and payment clearing, how scarce it is, how you authenticate everything. And across the board, we could just see that Bitcoin was by far just a sort of absolute advantage with regard to money. Is there anything about this chart that really stands out to you as notable? Maybe something you would fix as well?
Yeah, absolutely. So I think that something that people might stub their toe on is this idea of low transaction costs, which, as I mentioned, transaction costs it's a technical term from economics. I got it from Oliver Williamson, who wrote about transaction cost economics. And so it's not referring to the sats per vbyte transaction cost that we know from Bitcoin, on a technical level. That concept is actually captured by the line payment clearing, where for precious metals, it's expensive. For fiat currencies, it's centralized. And for Bitcoin, I put that it's cheap and distributed. And so meaning that it's cheap and that generally right now, I think it's probably around a nickel that you pay for transaction finality is what we might call that today. Although I think payment clearing is, from an economic perspective, probably the more accurate term. And that the only item I would add here is cheap, distributed, and volatile, right? That sometimes payment clearing is expensive for Bitcoin because it also serves as a denial of service mitigation feature, which is not the case for fiat currencies because it's, their systems are permissioned, so they can prevent denial of service through rate limiting. And then obviously with precious metals, nobody's going to do a denial of service because it's just inherently expensive to move gold around. So that's something I would add. I would just add volatility to the payment clearing. And then also I would add some clarification that transaction costs is a holistic concept. It's not just looking at how, what the fees are when you're sending a transaction, which I think trips up people who might be critics of Bitcoin's payment clearing costs.
Right, both from a fiat perspective and an altcoin perspective. This is something that I think has tripped up in later years. This is well before it, but in later years, the sort of scaling debates. In many ways, one of the disagreements around the focus on specifically the sats per VByte, payment clearing cost is that there are more transaction costs that we have to think about with Bitcoin. How much does it cost to do the authentication and the, actually validating the information? What does it cost to store the Bitcoin and so on and so forth? And all of these things have to be considered, like you say, holistically, as opposed to the kind of siren call of focusing in on one particular aspect at the cost of all others.
That's right. And the only other change I would make, which, only comes with, I guess, 12 years now of hindsight, it may be the case that a currency with even lower transaction costs is theoretically impossible. I would word that more strongly. I'd remove, maybe. I do think it's impossible. And that only comes with, 12 years of observation afterwards.
Yes, I think it is quite notable that considering there are, I think CoinMarketCap shows number of cryptocurrencies in the tens of millions now or something like that. And as far as I can tell, no one has produced yet something that has better transaction costs across the board. So, maybe there's something in the future. I don't know when we say theoretically impossible, I don't know that it's like, truly impossible, but highly unlikely. And even so, we've seen Bitcoin still improve on all of these things in many ways throughout the years as well. So it's not as though Bitcoin itself is static and unimproving. So that makes it additionally much harder to compete with. So moving on, Bitcoin is slowly supplanting metallic and fiat mediums of exchange. It is currently transitioning from the innovators to the early adopters phase. And here you shared a simple graphic of a technology adoption life cycle showing how there's basically an S-curve of technological adoption where it starts with the innovators, the people who are actually creating the thing, early adopters, the people who want to just, be very entrepreneurial, get their hands on new things, give it a try, see how it can, help with what they're doing. And then moving on to kind of an early majority, a late majority, and finally the laggards, the people who, maybe they just don't care, or maybe they're kicking and screaming, but, it kind of goes through this phase. And, at this time, you were saying innovators and early adopters, it's kind of in my mind, it's a bit of, it was kind of muddy. I think at this point, I think only now we've kind of entered the early majority stage, It almost is MicroStrategy in some ways is kind of a good, I don't know, watershed moment to me of moving into the early majority, where now it's, publicly traded companies are looking at it and taking it seriously. I think what stands out to me about this graph, and I think where I'm curious your thought on this, but my thought is I feel like I tricked myself by looking at this graph, because it makes things look kind of faster than they might feel in real life. And so I think at the time there was a feeling like, oh yeah, we're going from the innovators to the early adopters, and the majority is most of this bell curve. And so it's like, okay, well, we're getting to the early majority next soon, obviously. I mean, this was 3 years after Bitcoin had been created. So now, give it, another year or two, we get to the early majority. And it's through that you have the most accelerated Bitcoin adoption, and so on and so forth. So I almost feel like stuff like this aided in making me even more bullish than maybe was warranted at the time, and thinking, Bitcoin was literally going to win in the next, 5 years, as opposed to taking a bit longer than that.
Yeah, agree. I mean, looking back on it now, I think this is the most absurd and silly part of this article. It's just, I now I think it's completely wrong. I think we're still very far on the left curve. I think we're still deep in the innovators, or because it's got some percentages here attached, which is just illustrative, right? It says the first 2.5% are innovators. I think that we're at like the first 0.25% in terms of adoption, and I think whenever I'm doing data analysis with Bitcoin, there's always two ways of looking at the data: by count or by value. And so if you do it by count, you're like, okay, well, 1 out of the 500 S&P 500 companies understands Bitcoin, right? It's just MicroStrategy. Arguably, maybe Tesla. So let's say 1.5. Doubtful. But if you do it by value, it's way less than that, because these other companies are way bigger than MicroStrategy is. And that's the case at the corporate level. I think it's still the case at the personal level and at the institutional portfolios or sovereign wealth funds, because today we're debating this strategic Bitcoin reserve, and it's like it's a tiny fraction of the size of the wealth of the nation, essentially. And so there's this meme of we are so early, and somehow that's still true when Bitcoin's at a $2 trillion market cap, and that we're really this really stands out once we start talking about Bitcoin education. So even within the industry, the level of Bitcoin education is really rudimentary. So I think that this is the most wrong part of this article.
Well, hopefully this podcast will aid in that education aspect. I think a good takeaway there is be careful with heuristics, because they are mere heuristics.
Yeah.
So moving on, and we're getting into another chart, which is one of my favorite charts of all time. So that kind of makes up for this. This transition is accelerated by new intermediaries like Coinbase that are driving down the cost of selling fiat money for Bitcoins. At the same time as demand is increasing, Bitcoin inflation slowed considerably due to the block reward halving. And here we have a chart of Bitcoin inflation over time. So it's showing the issuance and the total monetary base over time. The years are a little off because mining has been, slightly faster than the expected 10 minutes, because there's a lot of miners out there and growing. And then it shows the inflation rate, which just has this, stepwise pattern down towards its, it's a geometric series with an asymptote of zero. And, it's pretty amazing that when this article was written, over half of Bitcoin had already been issued. That was within the first cycle. And, so a huge proportion of the Bitcoin supply had already been issued. And I think that I think that's great. I mean, just seeing this is the chart that shows why Bitcoin matters.
Yeah, this is the most important part of this article. And I do want to point out, I mentioned Coinbase. Like, this is how early this article was. Coinbase was new at this time. And, before that, it was you had to use BitInstant and use the red phone at Walmart, or you had to send a wire transfer to Japan for Mt. Gox. And so now, obviously, Coinbase has gone downhill since this article was written, so maybe we replace it with like River. But I also think that when we look at it being easier to sell fiat for Bitcoin, that's also multidimensional. And so I would actually also, again, put MicroStrategy in that bucket of these Bitcoin-backed securities are opening up a whole new way of selling fiat for Bitcoin. Now, the years on this, if I have this memory of the years already being wrong on it when we created it, and I just didn't fix it. So we'll have to replace this chart with something a little more accurate.
But part of me likes having the slightly off just to have the memories of wrongness. But maybe a little disclaimer.
A little disclaimer. And I also think that it's really important that Satoshi made the schedule so that the issuance was really front-loaded to get the Bitcoins out there. And now that, we're upwards of 90% of the Bitcoin being on the ledger, I think it really helps Bitcoin stand out relative to perhaps other competing cryptocurrencies where the issuer of it, centralized or not, has a tremendous amount in their back pocket that will come out. And so, people might look at Satoshi's stack of 1 million Bitcoin and say, oh, what about those? Well, what about those? Because it comes back to the Lindy effect, right? So the longer Bitcoin are held, the more likely it is that those Bitcoin are lost. I think that's a valid heuristic. I hope I get proven wrong so that I can stack some cheap sats. But that seems to be the case that at this point, if they haven't moved, they're probably lost.
I had never thought about this quite like this until now, but thinking in conjunction with the heuristic that we were just lambasting about the adoption life cycle, and you were making the argument, it's like, we're still probably in the innovator stage. We're not even into early adopters or early majority or anything like that based on, that kind of, mental model. With that being the case, the fact that we are only now, like the fact that big institutional interest, whether that's the government, whether that's corporations or others, the fact that that's not coming in until now, something like 93%, if I'm remembering correctly, of all Bitcoin has been issued. And realistically, by time some of these institutions really start taking Bitcoin seriously, it might be 99%, which is to say that because he front-loaded the Bitcoin issuance, Satoshi made it, purposefully or not, he made it such that by time the institutions are coming in, they have to contend with Bitcoin in its sort of purest form. The fact is issuance of money is it's not a good thing. It's a necessary evil, and Satoshi had to come up with a way to get the coins out, in a fair manner. And I think mining, attaching it to mining was a wonderful solution, but it also rewarded, kind of a bunch of, techies and libertarian techies at that. The fact that the governments then have to come in and deal with the Bitcoins that have already been issued. And so it's like they have to deal with a currency that literally just, does not print more, which is so vastly opposed to the given monetary system. It's kind of a beautiful thing.
Yeah, absolutely. And so I would recommend people to check out The Ethics of Money Production by Jorgito Holzman. Excellent book to get some ideas on why the issuance of money is not just an economic problem, but a moral problem. And also that they look at the Coase theorem of basically saying that when you're looking at property rights and wanting an efficient outcome, the best solution is to just privatize and let people trade. It's not to try to micromanage the outcome. And that you will get an efficient outcome. And so I really see Bitcoin's distribution as a very pure form of the Coase theorem, especially when combined with the fact that you need to do the proof of work to issue the Bitcoin and making that be a competitive process as well. And so you have a combination of a competitive process of wanting to hold Bitcoin and a competitive process for issuing the very, small amount of Bitcoin remaining.
Yes. All right, let's continue. The dollar value of all Bitcoins in existence now exceeds $300 million. So this is, and then there's a chart of the market cap, and this also goes to really date the article, because this, as we mentioned, Bitcoin is now over $2 trillion. So it's up, over 400,000%. And it's crazy to see, because like at the time, we looked at this chart and it was just, see, we're going to take over the world. And it's funny because this chart, you could take this chart and slap any years on it that you wanted, or any market cap on the left, and it would basically look the same. And that fractal nature has always been very interesting.
Yeah, absolutely. And so you can also see here that when I wrote this article, Bitcoin was basically going vertical. So maybe add that to one of the motivations I had for writing it, was that at this point I was euphoric that, hey, we're winning. And it also reflects the fact that, Bitcoin's price, the way to think about it is the reservation demand there is for holding Bitcoin on people's balance sheet. And so the price is just the intermediary between the total BTC supply and the total value that people want to have and to hold. And so as we get more Bitcoin adoption, and this is something Satoshi wrote about, and that also, got me really interested in Bitcoin, was that the adoption would not be neutralized by an increase in the supply of Bitcoin. Instead, it would be neutralized by an increase in the price of Bitcoin. And I think that will continue to be the case, which, does cause volatility, and people have made the complaint that Bitcoin's too volatile. But there's really no other way to have this work in a decentralized manner.
Right. I mean, even with a centralized thing, to go from zero to global reserve currency, it would be incredible if you somehow managed, even in a centralized way, to do that without a hiccup in price volatility.
Well, you could argue that the adoption of the euro in Europe, that they accomplished that, that it's feasible in that sense, but it's completely centralized and a disaster.
Yes. Let's continue. I think this is also one of the more interesting parts of the article. This leads us to an interesting question. Is the value of Bitcoins a speculative bubble? The price of fiat currencies and the debts denominated in fiat is the bubble that will burst. The relevant question is when the purchasing power of Bitcoins will peak. The appreciation of Bitcoins relative to consumer goods will slow down when the adoption rate tapers off and hoarders will use their gains to buy consumer goods. Simultaneously, fiat currencies will be in a hyperinflationary tailspin, and real interest rates will be spiking. High real interest rates will incentivize hoarders of Bitcoin to buy productive investment assets and lend to borrowers now unencumbered by fiat-denominated debts. At that point, Bitcoin's purchasing power for capital goods, i.e. interest rates, will decline, but the purchasing power for consumer goods will continue to drift higher due to productivity-fueled deflation.
Yeah, this is really tying it all together from a monetary economics perspective, and I don't think I would change anything here.
Yeah, I think it goes to show that there's nothing in particular that should stop Bitcoin from growing. It just continues doing what it does until the equilibrium has to come in the form, like you said, of an actual price change that comes from. Sorry, I'm sort of tripping over my words here. Could you kind of help explain to the audience kind of some of the nuances here?
Yeah, so I would argue that this has happened repeatedly, which is that the reason why the bull market stops is because people want to rebalance. And so you have people who were sitting on Bitcoin that has tremendously appreciated in value, and then they go out and they, will go put their kids through college or buy a Lambo or donate to their favorite charity. And that's really when you have the adoption rate taper off and people use gains to buy consumer goods or investment goods, right? If they're rebalancing their investment portfolio because they want to take some chips off the table or whatever it is and go buy some stonks. Now, so I think that, the only mistake here in my mind was that I thought that we would have a straight line, that essentially there would only be one bubble and that we were going through it at the time. The reality is that there has been several bubbles. I think there will continue to be bubbles in the future of essentially the price oscillating around an equilibrium. And that happens because humans are social animals and that we're prone to the kind of mass psychology of all wanting to buy Bitcoin at the same time. So it's just a matter of, okay, when will the final bubble? And that God only knows. But I do still stand by the idea that it's at some point in the future and it's not that distant.
Right. And, there's other, factors as well of, the amount of issuance that is still occurring and how that's going to affect, what people hold on to. I think there's also sort of feedback loops where, yes, people want to rebalance, but, will they want to rebalance 100% of their Bitcoin, or will they just want to rebalance a little bit because they want to take some off the top and enjoy something in their lives, because it's impossible to have, a time preference of zero. And these things are also feedback loops. So as Bitcoin is sort of growing, there's also a growing reservation demand, and there's going to be a growing reservation demand among new people as well. And so, all of this happens in a very messy economy. And the good thing is because Bitcoin is unencumbered by any kind of tether to fiat, it can freely move according to people's actual needs for Bitcoin. And this can come at a shock to people who are coming from a fiat mindset, which heavily prioritizes price stability. But in Bitcoin and in sound money in general, there is more of a desire for stability of everything else but the price. And the price is an emergent feature of how people respond to the qualities of that money and how much they need what that good offers at the given time. The last thing on that is you pointing out that the purchasing power for consumer goods will continue to drift higher because of productivity fueled deflation, meaning a sound money. Money in general is meant to fuel the division of labor, coordinate the division of labor. And the better money you have, the better division of labor you can support, which means more economic goods and more roundabout production happening. So you just have more things in the world. And when you have more things, more goods available and the supply of the money remains flat, then the price naturally goes up. And so it's not merely a meme when Michael Saylor says, forever Laura, because in a sound money economy, you really would expect the value of the money to trend higher over time, barring some various, cataclysmic event or something like that destroys factors of production.
Yep, that's right. And I also think that it pushes back on this doomer argument that somehow Bitcoin is a bet on the collapse of society and that somehow, Bitcoin's value would go up if economic activity or the fabric of society fell apart. I think that the opposite is true. I think that the value of Bitcoin would go down and that the value of Bitcoin goes up as we have a prosperous civilization. And in fact, the only way to have a prosperous civilization long term is with Bitcoin as the monetary standard.
Yes, that is a very good point. That Bitcoin is actually a bet that people who use Bitcoin will have better decision making, or Bitcoin existing in the economy trends towards better long-term decision making, and therefore actual economic production. And so, yeah, I agree. The doomer mentality is, I think it's a holdout from the days of gold, where we just had to we almost had to assume that things would have to collapse for anyone to come to their senses. But as you talked about at the beginning of this, we don't have to think that way anymore. And Bitcoin offers us a path forward and a true upgrade. And I'm personally very, very thankful for that.
Very hopeful, as our friend Michael Saylor would say.
Yes.
Hope.
So finally, if you're interested in getting rid of central banking, I would recommend hoarding Bitcoins by transferring your dollars to Coinbase.com, 1% fee, and sending the Bitcoins you buy to a secure computer. This hoarding sets off a virtuous feedback loop that accelerates Bitcoin adoption. And from this, you pulled a chart that came from Bitcoin Talk, where someone showed hoarding as part of a feedback cycle that leads to a higher price, more attention, more mining profitability, which leads to better security, higher perceived legitimacy, more adoption, and more adoption leading to more hoarding, and so on and so forth. And once again, Coinbase really was an incredible advance at the time. It was incredibly sketchy to try to get your hands on Bitcoin. If you weren't sending it off to a sketchy Japanese bank, you were, trying to meet a sketchy person on local Bitcoins or something if you wanted to buy Bitcoin. It was not pleasant. And Coinbase showed up. It was, Y Combinator company, so it had sort of that reputation. It looked good, it looked professional, and it worked. And you could use it, with your regular bank account. And as far as the goal of just trying to turn your dollars into Bitcoin, it was hard to ask for much more.
Absolutely, good memories of the Twitter bootstrap theme there. So, the only thing I would change on this chart, I don't think total hashing power is related to the security of the network. I think that was something that a lot of people got wrong, and I got wrong. You could just draw a straight line from total hashing power to perceived legitimacy. I think that would work just fine. And, don't transfer it to a secure computer. Okay, go follow Rodolfo Novak's security guide and get yourself a hardware wallet and a metal seed plate backup.
I guess you could, call that a type of secure computer, but yeah,
Sure.
at the time we were talking about like an actual, laptop or something. And this also, dates it. Bitcoin security is, it's unfathomably better today than it was then. I remember we had friends who would try some wallet and then they'd end up losing their money because they didn't understand that they were just using some online wallet inspector type, referencing the Simpsons meme, but it was just, some scammy online wallet of some kind, and they'd use it and lose their Bitcoins.
It was the Wild West. It was Mad Max back then. And, a lot of people through that experience, they ended up going crazy because of the opportunity cost. And the other thing is that, usually you don't have to pay a 1% fee anymore to buy. If you go buy at river.com, 0% in all sorts of different ways. Bitcoin adoption has gotten a lot easier and less expensive.
Yes, it's been quite the journey since then. And look at where we've gotten since. Now, when I look at this article as a whole, and in the context of the various narratives around Bitcoin that have developed over the years, one of the biggest ones to me is the fact that, and as a reminder, this was the first time that we spoke publicly about Bitcoin, Pierre in particular, and we were very, very new to the whole idea here. This was weeks after we're reading, a master's thesis on Bitcoin for the first time and really like digging our teeth in. And immediately for us, our position was already that the the way to see Bitcoin take over the world was through the hoarding of Bitcoins. That is just saving Bitcoin. And so from day one, we were heavily focused on the savings aspect of Bitcoin. Many people, at the time were primarily interested in the sort of payments technology side of Bitcoin, wanting to, use it to buy stuff. And, there's nothing wrong with using Bitcoin to buy anything. It's actually great. There are many benefits to it. But that was seen as the path to global Bitcoin adoption is you're getting mom and pop stores to be accepting Bitcoin. And from day one, we were not of the same mindset. We were talking about Bitcoin as a major savings vehicle. Now, the naive meme of this was sort of digital gold, and there's lots to criticize there. But at the same time, that's sort of what piqued my interest in Bitcoin was just understanding is like, oh, this is like sending gold through the internet. And part of that is, gold is it is a savings vehicle. As we discussed earlier, it's not necessarily the best savings vehicle in the Bitcoin age, or maybe even in the fiat age. But, that was coming from the Austrian theory of money, of understanding savings as the basis of economic growth. And I just think that's interesting that, we're told over and over by a lot of Bitcoin skeptics of various factions that the narrative of Bitcoin used to be all about payments. And then at some point it shifted to this whole, digital gold narrative, and we're just hold it in vaults and stuff like that. And I think this article just, to me, does a great job of showing that's simply that's not true for everyone. At least for us, that we were never, payments maximalists and then switched our tune. We have always advocated for Bitcoin as a great savings technology. And so I don't think that the argument that Bitcoin changed narrative, I think for a lot of people, a lot of others, they did have that idea. And over time, they had to come to grips with the fact that, well, maybe when we look at the transaction costs of money as a whole, payments technology is not the dimension that Bitcoin is most competitive on, when you can use Apple Pay and whatever else to spend money in a very convenient and great manner, not without its own costs, but that wasn't really what Bitcoin was competing on. So for a lot of people, I think there was that shift, but I think it's important to stress that it wasn't as though the hoarding Bitcoin idea came out of nowhere in, say, like 2017 after the block size war or something. This was well before the block size war. This is how we at least viewed Bitcoin.
Yeah, that's right. And I've since then I've had a lot of like strange interpersonal conversations with people, either where they have like a chip on their shoulder and they're telling me that they're an OG and that they were around Bitcoin before I was, and that, they essentially feel resentful that somehow I have like more influence or a bigger voice than theirs. And, they'll send me something that they wrote in 2012 and it's just like completely off base. And I'm like, well, look, it's not enough to just have been around back then. You had to be speaking the truth that held the test of time. And so, here we are. And unfortunately, there's a lot of people today who still are not on the correct page as to what drives Bitcoin. And they're still stuck in this morass of either they're stuck in payments, as you mentioned, or utility. Right? They're looking for utility, and to them, it's they still, when they hear hoarding, they think speculation and they think worthless, and so their brains are still fundamentally illogical in their approach to Bitcoin. They need to rewire it, and they need to accept that speculation and hoarding That's only a problem if the underlying asset is a problem. If the underlying asset is good, like Bitcoin is, then fast forward 10 years and they're pretty happy about their speculation. So it's really been interesting to kind of see what some of the bad fruits are out there after, with all this benefit of hindsight. And conversely, people coming up to me and saying, hey, thank Michael Goldstein, thank the Nakamoto Institute. I read about it in whatever, 2016. I bought a bag, got to quit my job. I've been traveling the world or, raising my kids or whatever it is. And so there's lots of good fruit that has come from this tree of knowledge of the Nakamoto Institute. And so that has been something that has been just wonderful to see over the years.
Yeah. And I mean, I feel lucky to have, found myself in the right place at the right time with the right ideas. There were many people who had very adjacent views of even Austrian economics, but had one little thing was off, and you magnify that over years, and it's not such a small error. And so much of that, like you said earlier, we're standing on the shoulders of giants and just trying to synthesize the best that we could. But this stuff is beyond us. We're not the ones who established the truth. We were just trying to do what we could to discover the truth. And, that's also why you can have people come in much later to Bitcoin and actually have a much more astute understanding of Bitcoin than a lot of OGs, maybe even us, because of the fact that they were, going for the truth. And that sort of matters more than just your personal desires of what Bitcoin ought to be, but understanding what it really is. And I think a lot of the articles that we're going to be talking about here on the Reorg were basically addressing what were perceived as errors at the time. And a lot of these are, it's the eternal recurrence. It's just every day is Groundhog Day, and there's a new person to say why volatility is bad, why hoarding is bad, why, proof of work is bad, whatever it might be. It comes and goes, and so we put in the work early on to sort of combat these errors by thinking through them and seeing does this actually align with our understanding of how money works. And so far, I do think that this has borne a lot of fruit, and this is why even after 10 years, I think this is so valuable to go back and look at and just sort of be beating the same drum, because as you were saying earlier, education also, it takes so much time to actually get people to shift their mindsets, even when things are growing. Even 2 trillion is so crazy compared to what it was then, and yet even today it is such a small drop in the bucket to the global economy. And so there's so much more educating to do, and hopefully this podcast can play its humble role in aiding in that.
Yep, that's right. So thanks for kicking this off, Michael.
Yeah, thank you. And next time we will be discussing another one of your articles. So I hope we will see you again and get to chat about that. And for everyone else, thank you for listening. And, this podcast is brought to you by the Satoshi Nakamoto Institute, which survives off the support of its generous readers. So if you have gotten value from this podcast, or just from, reading the Satoshi Nakamoto Institute at some point, consider throwing some sats at us to help continue this education process.